a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about the best performing ETFs of the third quarter. Now, the third quarter was a very challenging quarter for US stocks. This was the first negative quarter of 2023, and in fact, September was the worst month for stocks. And the Dow fell 2.6%, the S&P 500 lost 3.6%, and the tech-heavy Nasdaq was down 4.1% during the third quarter. Now, energy was the best performing sector. It was up about 12% because crude prices surged about 25% during the quarter due to rising demand and mainly due to supply cuts by OPEC and its allies. Communication services was the only other sector in the green. It was up about 2%, and that was mainly because investors bought Google, Alphabet, and Meta platforms, earlier known as Facebook, because these looked slightly more attractive on valuation basis among the mega cap tech stocks. So while Microsoft and Apple were down, these two stocks, Alphabet and Meta, were up, boosting communication services sector. Rate sensitive sectors, because interest rates surged during the quarter as investors worried that higher interest rates are going to stay for a longer period of time, an extended period of time. So that is why these rate sensitive sectors, real estate and utilities, were the worst performing sector. They were down about 9.2% and 9% respectively. Now let's take a look at the top performing ETFs, the best performing ETFs of the third quarter. So the first one that I'm highlighting is by Simplify. It was actually one of the best performing ETFs of 2022 as well, when almost all major asset classes had a terrible performance. And this ETF seeks to hedge against rising long term interest rates, and also it seeks to benefit from market stress when fixed income volatility is very high. So those conditions, they were perfect for this particular strategy. So that is why this ETF surged about 52% in the third quarter. This has about 230 million in assets and charges an expense ratio of 50 basis points. Now, if you want to learn more about this ETF, you can go to the quote page on Zacks.com, read our research, and then using the link, you can go to external web page, the Simplify web page for this ETF. So Simplify has many ETFs that provide hedge fund-like strategies to retail investors in an ETF wrapper. So this holds options. So those are slightly, complicated strategies. Most investors would like to use some active manager or ETF like this for investing in those kind of strategies. And if you want to learn more, you should read their research. You can watch the video. I did a podcast with the provider recently where we discussed PFIX and other ETFs, hedge fund like ETFs that this provider has. So you can listen to this podcast if you want to learn more about this ETF. The second ETF that we are highlighting is a cannabis ETF. Now, cannabis stocks surged in the third quarter, uh, particularly last month, for two reasons. First, the Department of Health and Human Services asked the DEA to review its classification of cannabis. So, cannabis is currently a Schedule 1 drug, where it is classified along with heroin and LSD, those type of things. And the new designation would put it in the same category as steroids, testosterone, and ketamine. So that was a positive development. And then the Senate Banking Committee recently approved the Safe Banking Act. That act is very important for cannabis companies because that would allow cannabis companies to use major financial and banking institutions. Currently, they are not able to. Now, that bill is headed to the Senate now. The problem is that it faces a more uncertain future in the Republican controlled House. So let's see what happened to this Bank Safe Banking Act. But in the hopes of regulatory developments, the cannabis stocks surged. Weed is the cheapest marijuana ETF. It did pretty well. It charges just 40 basis points and has about 4 billion in assets. So it's a small ETF. So that is why investors need to be a little bit careful. And the most popular marijuana ETF, MSOS, that holds US cannabis companies via swaps, that also did pretty well. Other cannabis ETFs also did very well due to these developments. And again, you can go to the quote page on Zacks.com using the link, so you can read our articles research report. Using the link, you can go to Roundhill webpage for this ETF. So this holds companies as well as cannabis companies, as well as total return swaps. So currently it mostly holds these total return swaps to provide exposure to US cannabis companies, and that is the main reason why it has done quite well. I recently did a podcast with Tim Seymour, who's CNBC's cannabis expert. So he explained these developments and he manages the cannabis CNBS ETF. So you can listen to this podcast if you want to learn more about what's going on in the space. Now, the third ETF that I'm highlighting is the Sprott Miners ETF, Uranium ETF. Now, I'll not spend a lot of time on this ETF because I talked about uranium just last week. So, this ETF surged about 47% in the third quarter. And why uranium prices have been rising? Due to because there's rising demand for rising interest in alternative sources of energy, and uranium is one of the cleanest ways to produce electricity. So and the demand from nuclear reactors are rising as new reactors are coming online. Existing reactors are extending their operating licenses, and old reactors are also restarting, particularly in Japan. So supply has become a big constraint. I talked about all that in my last week's video. This has 1.4 billion in assets and charges 83 basis points. Again, if you want to learn more, you can go to the code page on Zacks.com, and you can go to a Sprott webpage for this ETF. Sprott has some very good research about uranium. So if you want to invest in uranium, you should read more. I mentioned the ETF video that I did last week, so you can watch that video if you want to learn more about uranium and other uranium ETFs as well. Now, on the last slide, I have the comparative performance over the past 1 year. So, a lot of volatility, particularly in the cannabis ETF, which is still down despite the recent surge. It is still down about 15% over the past year. The other two ETF, the top performing ETF, PFIX and Uranium ETF, they are up about 45% over the past year, and the S&P 500 index is now up about 20% over the past year. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Also, make sure to subscribe to all our videos, our video channel, so that you do not miss anything. And I'll see you next week.